Tariffs once again take center stage, and even good economic data as it pertains to manufacturing and pricing could not spur a rally in the markets. What's going on, y'all? My name is Kevin Weedmark, aka The Mortgage Mouth, coming to you with another episode of the Daily Dose. Very quick 2 minutes of what's going on in the marketplace and how it affected interest rates. And coming in after the holiday weekend, obviously it's a short week. That always raises concerns. But the big damage was done at the end of last week. The market got the weekend to digest it and came out swinging today with sell-offs across the board, not only in the markets, but also sending the Treasury, the 10-year Treasury higher, and sending interest rates up slightly from their recent lows. And the damage is due to the courts once again. They can just not stay out of the kitchen, as I like to call it. They constantly have to get involved. They constantly got to give their 2 cents. This is non-constitutional. So now what's at hand is, okay, what happens? And nothing's going to happen immediately because obviously there'll be an appeal. And more than likely will need to head to the Supreme Court. And let's hope they get off their asses and make a decision sooner rather than later, because what it does is it creates uncertainty. So regardless now of the economic data that you have coming out, you're going to see a Fed hesitant to do anything, because now does the U.S. government have to pay back the money that they've gotten from the tariffs? Do they got to pay back? What are they talking now? Like $40 million that they've received in revenue from the tariff revenue that they could use to pay down the federal deficit or use for some programs or what have you. What now happens? And the answer is no one knows. And if the courts would just stay out of this shit and let the government do what it needs to do on a global scale and on a federal level, that would be great. In the meantime, we're dealing with higher rates, y'all. Cheers.